guys, Victor Delerme here, and today we're going to change the format a little bit. Today we're going to be actually reacting to maybe the Reddit's worst tax advice that I've seen in a long time. So let's dive into it. First one, I haven't filed a tax return in 11 years and the IRS doesn't care. Just stop filing. That's nonsense, right? So the IRS actually knows exactly what you're doing. Likely what the IRS is going to be doing is at some point they're going to be starting issuing tax notices, and it's going to be telling you, hey, this W-2 was reported, this 1099 was reported, and you haven't filed your taxes, so you owe us money. So there's going to be elements of penalties and interest, right? Late filings and then late payments, if that's the case. So what you want to do there is, first of all, you want to talk to a CPA, right? You want to know the reason, what truly happened. Why is it that you haven't filed your taxes in 11 years? Health matters, family matters, economic matters, hardship matters, etc. Right? Like all that stuff is important. Likely the CPA is going to get a power of attorney, and you're going to give authorization to the CPA to contact the IRS on your behalf. And then it's going to be requesting wage and income transcripts for the last, 10 plus years, right? Normally it goes back to 10 years. So that's exactly what's going to be happening. It's going to be requesting wage and income transcript. And then it's going to give you an assessment on every specific year, what the tax situation is going to be based on the income that your employer or the people that pay you reported to the IRS. And then good luck, because there's going to be interest and penalties assessed on the returns that were not filed and then the income that was not reported. So there's matters here that need to be addressed, right? Definitely talking to a professional that specializes in connecting with the IRS and working on your behalf is key. All right, second one. My original old-timer CPA told me I couldn't do a retirement because I didn't pay myself enough and I would raise red flags with the IRS. When my old-timer CPA retired, I asked my new CPA and they directed me to a SE IRA. I lost a lot of years due to my original CPA's bad advice. That's probably true. So when you are self-employed, right, you own a small business, you have the opportunity to put money on a SE IRA, right, which is basically putting money into a retirement. The amount of money that you can put into a SE IRA changes year over year. It gets indexed due to inflation. But absolutely, you have the opportunity to put money into it, and then you defer taxes based on the money that you put on that retirement account. It's kind of sad that this old CPA told you that you couldn't put money there and that it would raise red flags, etc. Probably that CPA didn't have the right knowledge, the right experience, or the right training in order for that person to give you the right advice. So I'm sorry that you went through that situation. But look at the positive side. You have a new CPA giving you the right information. So go and leverage that opportunity, right? And put money into a SE IRA. Max it out if you can. Find other deductions and credits that you can qualify for. So money that you've lost in the past, maybe there's other ways for you to find those opportunities. Maybe you can do some amendments in prior years and get those funds back. And then you take that money, you put it back into your business or into retirements, into the future. So the battle is not completely lost here. There's always opportunities for you to have a better outcome. Third one. All right. Everything you charge on your business credit card is tax deductible. Everything. Yes, everything. And otherwise, what's the point of the business credit card? Okay, so yes and no. In order for you to deduct an expense for the business, needs to be a necessary and ordinary business expense. Whatever expense you're incurring for the business needs to be for the life of the business, in order for you to service your clients, in order for you to sell your product. Like, you're spending money, but it's for the benefit of the business. It's for the benefit of who you're servicing, right? So it doesn't mean that everything you charge is going to benefit the business or your clients. You got to be careful about the expenses that you run through the credit card. Just make sure that these are ordinary and necessary expenses for the business in order for you not to get into the bad side of the IRS. Next one. Well, just because you didn't get a 1099 doesn't mean it doesn't count as income. Yeah, so 1099s, if the pay is $600 plus, yes, a 1099 needs to be issued. That's the rule. But it doesn't mean that if you didn't get a 1099 or a 1099 was not issued, it doesn't get reported as income, right? So any money for services that you provided, work that you've done, and you're an independent contractor, it just needs to be reported, right? So, and we've talked about this, right? If you're a single member LLC, it gets reported on your Scale C. If you have a partnership, it gets reported on a 1065. And if you own an S Corp, it gets reported on 1128. But what's important is that you report every single dollar that you earn as an independent contractor, as a business. You need to make sure that you report that in your income tax returns. It doesn't matter if it's in your personal tax returns or in your business tax returns. It's highly important. Why is that? Well, because if you don't report it, the IRS is going to issue what's considered a underreported notice, right? They could find out that you got paid, you did not report that in your income tax return. And again, I mean, think about this. The fact that you earn the income doesn't mean that you're going to have to pay taxes on that income, right? And why is that? Well, because you're going to have the right planning, right? With the right planning, you're going to have the right deductions and the right write-offs and the right credit. So remember, report the income and then find ways for you to plan properly and expense transactions that are important for your business and your customers and your clients. And then at the end of the day, it's going to give you a tax benefit. Next one, turn down that raise and I'll put you in a higher tax bracket and you'll pay more than the raise will give you. Really? Okay, so in other words, you're getting paid more money, but because you believe you're going to pay more taxes, you don't want the money. Does that make sense? No. Right? Take the money, right? Take the money and find ways for you to reduce your taxes with the right tax planning structure. So what you want to do is, if you're going to get a raise, get the raise, and then you can make adjustments at the withholding level, and that'll give you, a good outcome at the end of the year for tax purposes. At the same time, if you're an independent contractor and you're getting paid more, now you will find more ways for you to have the right deductions, the right write-offs and credits against the money that you are earning now, right? So yeah, take the money and then find ways for you to keep more. That was pretty much my reaction to this worst tax advice that I've seen in a long time. And again, my name is Victor Delerme. I'm a CPA. We've been in business for many years. And if you guys would like to have more information about how we can help you answer any questions that you may have for your business taxes or your personal taxes, drop a comment down below. We'll get back to you and give you the right information. And guess what? We'll see you soon.